Okay, guys, hello, wherever you are calling from. We've got Michael in Vancouver. We've got Chloe, and I think Bob Joe, I think, is also, Alex, I think, is also in the Seychelles. Maybe if I've missed anybody, I apologize. We have got me and a few others here in rainy London and Richard in Leicester. But great to have everybody on the call today. We're going to go through some of the questions and answers. And one of the things I also wanted to do is spend just a little time on one of the tools, just making sure that we understand that we have massive, massive benefit from the tools and services that we are paying for. All right. So I hope everybody's well, and I hope you've had a good trading week. I'm just trying to find my correct screen right now. Hope you've had a good trading week. Okay, let's get straight to it. We had a couple questions in on our win-win group chat. So I'm going to let those guys read out their questions for anybody who's not in that group chat. I'll cover them off as quickly as possible. And then what we'll do is, if there is time, we'll cover any questions that we get on this call later on. The main point of this is for FX training. I know there's massive hype around HFX right now, and so there should be. It's money in minutes, time-based trading. You know the results of your trade within 3 to 5 minutes, and it is taking London, and in fact, it's taking our community by storm at the moment. So fantastic stuff for all of you who are trading HFX. My specialty is in traditional foreign exchange. So whilst I'm enjoying learning HFX and getting good at it, I'm pretty competent on this traditional foreign exchange, and here to help you with that today. So let's jump on the first question, which was from Richard Mitchell. Hey, Richie, how you doing?
Yay.
Yeah, unmute yourself, bro. Your question, I'm just trying to find it on my chat. Your question, go ahead, bro. Just read it out so everybody knows what that question is.
Let me try and find it. It was all to do with price movement.
Yeah.
So in tonight's meeting, can you explain why price movements moves fast upwards or downwards on the institutional candles? That's question one.
Okay, and and we'll leave your question to afterwards. Okay, super cool. All right, so listen to this. Richard is asking, why does the price move so fast in one direction, upwards or downwards? And I think it's good to kind of tie this in with the second question. The second question was, why did it sometimes take so long to reach the area of interest that we want to execute our trade in? I think it's a really, really good question. Let me share my screen so I can help you understand this. And of course, when I do share my screen, things will should start to make sense almost immediately. Okay, give me a sec. So, hello to everybody who I haven't said hello to yet. I hope you're all well. Thank you for joining the call today. First question was from Richard. Can you explain why the price moves happen so fast, upwards or downwards, on the big institutional candle and the big institutional moves? Really, really good question. The first thing to note really is that there's two ways that all right. So in terms of direction, price is either going to move upwards or downwards. We know that already. We're either going to be having higher highs and higher lows, which is going to create for us an uptrend. All right, everybody is familiar with that pattern. Let me do it here so we can see it. Okay, good. So we're either going to be creating for ourselves higher highs and lower lows. Okay, we know this very, very well. We've all seen this. All right, but what happens in between here is really, really important. Either higher highs and higher lows, or if I switch this around, we're going to be creating for ourselves lower highs and lower lows. Now, the higher highs and the higher lows, we know for sure this is an uptrend. Really important. I know I'm coming to your question. We know for sure that this is an uptrend, higher highs and higher lows. Okay, I can move that there. We also know that if I switch this around, the lower highs and lower lows create for us a downtrend. Very important. So we know the price moves upwards or downwards, and a collection of lots of up and down movements can create a sideways looking movement, but really the price only moves upwards or downwards. There's something else that's really, really important to know. that in an uptrend, this is the answer to your question, Rich, is that in an uptrend, you get two types of movement inside the uptrend, typically. Two types of movement inside the uptrend. You get what we call an impulse. Oh man, I wish I could type today. You get what we call an impulse. And then after every impulse, you're going to get a period of retracement or correction. Right. Retracement or correction. So very important. We know what constitutes an uptrend is higher highs and higher lows. But after the higher highs and higher, inside the higher highs and higher lows, we get a series of impulses and correction. All right, we get a series of impulses and correction. There's another impulse and there's another correction. All right, the correction is a little bit long, but you can see what I mean. The correction ends here, the correction ends here, the impulse ends here, the impulse ends here. All right, let's do it like that. All right, and we can continue like this all the way to the end of the trend. And lastly, we get a final impulse. Now, the key to note here, Richard, in answer to your question, is why does the price sometimes move fast in one direction and slowly in the other? Is that impulses are fast movements and corrections are slower movements all the time. You can bank on it. So the key here when you're trading is to try to understand, am I in an impulse or am I in a correction? And these happen on any time frame, right? These happen on any time frame at all. So let's just see here. This could be a 1 minute chart, 5 minute chart, half an hour chart, 1 hour, 4 hours, 8 hours. Doesn't matter. It could be any time frame. But what we do know is that we know that we're in an uptrend. The impulse in that case, if we're in an uptrend, is going to be a fast movement to the upside and then a small correction, and then another fast movement to the upside and then a small correction if we're in an uptrend. If we're in a downtrend, then you know that the impulse is going to be a fast on the downside with a slow correction, another fast impulse with a slow correction, and another fast impulse with a slow correction if we are moving to the downside. So just bear that in mind when you're trading. It's really important to know which side of the trade are you on. Are you on a buy? Are you in an uptrend where the impulses are going to be fast towards the upside, or are you in a downtrend where the impulses are going to be fast towards the downside and the upside corrections are going to be slow? Really, really important to know which side of the trade that you are on. Rich, did that help to answer your question? I'm going to give you.
Yeah, it did. That's a good explanation.
I'm actually going to show you this. This is an example which I've just drawn out, but I'm actually going to show you this live on the chart right now. If we go down here, we can see exactly that for a period of time. All right, here we saw a massive impulse. Here, you see,
yeah,
we saw a massive impulse. This is Ripple for anybody that's been looking at Ripple today. We saw a massive impulse to the upside in early November. And then there was a correction. This correction was actually quite fast. But this correction, let's look at it. Let's really examine what I'm talking about here. It's quite important for us to realize. The price went from this one here on the 19th of November to here, to the top. It went from there to there. There's usually, it will tell me how many bars this is. So it's 177%. That's like 3 times the price nearly. Okay.
Yeah.
3 times the price, and it's done that in a period of. Let me just give you the days. It's done that in.
It tells you at the bottom, isn't it?
Yes, thank you. It's done that in a period of how many bars? It usually tells me the bars. Sorry. One second. Yeah, so this is.
Isn't that 2 days?
25th.
Wash yourself properly.
This is the 25th, and that move started on the 19th. So literally 1 week. Okay. So literally 1 week. That move happened in the space of a week from the top all the way to the top. Now look how long it's taken for it to do this move all the way back down to where it was, all the way back to here. Let's look at that, because that is the retracement. Okay, that is the retracement. Let me just try and find the right tool here. It should be this one here, date range. So from here to back to here, to this level, to this price level, let's say to here, that's taken 89 bars, where it took 12 bars or less than that the week before. Okay, so this is taken this retracement has taken a lot longer, and it's really important to know that retracements are slower. So then if we are in an uptrend, what we would be expecting then is that we get another impulse to the upside at some point or another. Well, look at what happened here today, right? This is over the last weekend, we've had another massive impulse to the upside, and now we're going to start to see this work down before going higher again, in my opinion. So just a good thing to note: impulses are fast, corrections are slow, and it's important to know which side of the trade you are on to make sure that you catch the impulse, and that you kind of trade the corrections only if you know that you're in a correction. What we really want to do as traders is to catch the impulse moves. All right, I hope that answers your question. Why does it take so long to get to the price we need in the future, was the second part of your question.
Yeah, and that you've answered it in terms of it took X number of days to get there.
Yeah, I mean, if you're in an impulse, that can happen really, really quickly. If you're in a correction, who knows how long that's going to take, and we're just not in control of that. So we let the banks do what they're doing, we let the institutions do what they're doing, and then we just ride on the back of that. All right. Lesson learned in this one is that you always want to know which side of the market you are on. Are you in an uptrend or are you in a downtrend? And you want to make sure that you can position yourself for the impulses, because the impulses are where you're going to fastest movements. Okay. All right. I hope that makes sense. Is that all good?
Yeah.
Let's go on to the second question. I've just muted everybody because I know people are coming in. So great to have so many people on the call today. Robbie, I think you had a question as well today, my friend. Can you unmute and just ask your question, mate? Don't know if Robbie's there. Maybe Robbie.
Just how do I know what lot size to use based on the size of my account?
Okay, this is a brilliant question. I was hoping somebody would ask this question. These kind of questions only come from clever people, yeah? I'm not saying Richard ain't clever, because Richard is very, very clever, and that question was clever. Am I digging a hole for myself here? Should I just move on to answer the question? I think I just
Answer the question, Jed. Just answer the question.
So for those of you that don't know, Richard is like my longest time friend from when I was young. So we're always running jokes on each other. Okay. Rob's question was, how do I know what lot size to use based on the size of my account? This is essential. I can't tell you how important this question is. It is an essential question to answer. How do I know what lot size to trade in relation to the size of my account? Okay, everything starts with the trade setup. Everything starts with the trade setup. You're going to need to have a trade idea in place. Let me see if I can find one. It's unbelievable to see this trade moving in this direction right now, to be honest with you. You're going to have a trade idea in place. I'm trying to look for one. I'm trying to look for a trade idea. Okay. Let's take this trade idea here. This is just one we're making up on the fly. I want to enter a trade. Anybody who knows how we do this, we're going to say here, I want to enter a trade here. You've got to do the analysis first. Understanding what lot size to use starts with analysis. You've got to kind of find the trade first. Once you've identified a trading opportunity, then you consider how to actually put the trade in place. So we're going to say, for the sake of this argument, we're going to enter a trade here, right? We are going to target this area up here, just for whatever reason, it doesn't matter why. And we're going to put our stop just below the wick of this candle here. All right, just below the wick of that candle. So let's use the tools in TradingView to set that up. We're going to go with a long trade because we want to buy from here. And we want to move our stop loss just underneath this candle here, just underneath there like that. And we want to put our take profit, let's say up at this blue line up here. Okay, so this is a nice trade. How do I know that this is a nice trade? Because I can see the middle bit here that this trade is giving me 6.5 times my risk. Let me explain. We're coming to the answer. I know this is really, really important, so please pay attention to this. This is maybe the most important topic in trading in terms of how to save your money, how to preserve your capital, and how to grow your capital. It's one of the most important questions. And it's tied to another question, which is where do I put my stop loss? This part in here is your risk. That red bit is your risk. That is what graphically you are prepared to lose. Graphically, you're prepared to lose that much. Some people might consider putting it underneath this candle here. That's still not a bad idea, because you can see that the risk to reward, you still get 4 times your risk. And I'll come back to that in a minute. Let's leave that there just for now. So this is your risk, and this is what you're prepared to lose. We're going to have to convert that into a monetary amount at some point or another. This is your gain. And you're saying, well, if I risk this much, I stand to gain this much. And this is a good ratio. You want to make sure that your risk to reward is always greater than 3 to 1. Otherwise, it's not really worth the trade. 4 to 1 is great. If we can make a smaller risk, then we can make it 5 to 1 and 6 to 1. If we drag it to more, take profit, we can make it 7 to 1, 8 to 1. But playing with this risk to reward is essential, guys, because this is what's going to multiply your account really, really quickly. And this is what's going to preserve your capital. It does 2 things. Managing your risk is going to preserve your capital, the most important thing in trading. And managing your risk is going to accelerate the growth of your trading account, which is the second most important thing in trading FRX. Okay, so what do we do? Let's imagine we've got a trading account that is to the value of £1,000. All right, let's say it's a nice round number and easy to work with. I did the wrong thing. I'm sorry, I did the wrong thing. Let's say we've got a trading account which is to the value of £1,000. £1,000. Now, we want to make sure, essentially, we want to make sure that inside here, inside the risk, we don't put any more than 2% of our trading account. That's kind of important. We don't want to put any more than 2% of our account inside this risk. We don't want to risk losing more than 2%. So let me put that on there. So inside here, we want to make sure that it's max 2% of our account, which in this instance, 2% of 1,000 is going to be £20. So we're prepared to lose £20 inside that risk. And if we lose £20, we're not too bothered. It's £20 out of 1,000. We can walk away. We've still got £980 left to trade with. We're going to find another good trade to set up. All right. So here's 2% risk equals £20. If I'm getting 6 times my money, what am I targeting? I'm essentially targeting 20 times 6.5, which, if my maths is correct, is going to lead us to £130. So this potential gain in here is £130 potential gain, right? So I'll tell you what, my friends, I will take this trade every day. I will always risk £20 to gain £130, because essentially we're gaining 2 times, so we're gaining 12% of our account here. All right, 13% to be precise. Okay, the question was, how do I know what lot size to use based on the size of my account? It starts with knowing your risk. Every trade, please understand this, family. Traders start with considering what they're going to lose before looking at what they're going to gain. This is really, really, really essential. Traders start by looking at what they're going to lose first, rather than looking at what they're going to gain. We have to flip this on our head. We're not buying and selling pens or widgets or cars or whatever it is. We are looking at our potential loss first. And actually, as a business person, as an entrepreneur, it's a great way to think about things is, what is my potential risk in relation to my potential gain? If my risk is worth the gain, I'll take the risk every single time. So £20 risk goes in here for a gain of £130. I'll take that. Now, the second thing to know is, well, how many pips is this? And this is how we work out the lot size. How many pips is this? If I put my mouse over it, it will tell you that this is 30, let's say 34 pips. So for the maths of it, this is not hard maths. I don't want anybody to get worried about it. Basically, we are risking £20 inside 34 pips. This is the calculation. £20 inside 34 pips. And if I get my calculator from somewhere, £20 divided by 34 pips, it gives us an answer of 0.58 pounds. Remember, this is what we're doing, 0.58 pounds for every single pip. So this is the answer to your question. Once you have found your risk, you found the trade. Once you found the trade, and once you have found your once you've decided how big your account is and what percentage you want to trade, now we know that 2% of 1,000 is £20. £20 inside 34 pips means you should be trading at 0.58 pounds per pip. That's it. 0.58 pounds per pip. If you want to,
that's 58p, yeah?
That's 58p per pip. All right, 58p per pip. But I tell you what, it's nice to think that 58 pence per pip is going to put £130 in a £1,000 account. You're going to gain 13% on £58 per pip. Now look at the magic that happens here. Let's do something really clever, real quick, real quick. Imagine we win this trade, and now our trading account goes to £1,130. Right? We won that trade. £1,130. That's our trade size. That's the size of our account now. All right. Well, now what we need to do, imagine that we found the exact same trade. Just for the sake of the example, we found the exact same trade. Right? We won them. We get the exact same trade. We want to risk 2%. But now this is the wonder of compounding, guys. Please, again, really important. We want to risk 2%, but now that 2% is no longer 2% of 1,000. It's 2% of 1,130. So let's do that. It's 0.02 times 1,130. That gives me £22.60 that I can risk to lose from my trading account. I'm happy to lose £22.60, which if I lose that, I'm still going to have more than I started with. I'm still going to have more than I started with if I lose that trade. All right. So now with a bigger account size, our risk is £22.60. Let's work out, and I'm going to show you a super easy way to do this in a second. I'm actually just giving you the mechanics, and then I'm going to give you an app that basically does it for you. All right. So £22.60. We know how many pips is in that trade. We're going to divide £22.60 divided by 34 pips. Now, guess what? Here's the magic. Now what we're doing is we are multiplying our trade. Our trade size is no longer 58 pence per pip. Our trade size is now, let's do the maths. I'll show you on the screen. It was £22.60 as a risk divided by 34 pips. And this equals, now we've got a trading size of 66.4. Sorry, let me just do this right. Sorry. We've got, there you go. Instead of 58 pence per pip, now you're trading a larger lot size at 66 pence per pip. Now look what that does. The exact same trade, 66 pence per pip times 221 pips. Times 221 pips. Last time that exact same trade gave us £130. Now this exact same trade is going to give us £147. £147. All because we've got a bigger trading account size. All right. Now imagine if this is no longer 1,100, but imagine if this is an £11,000 account size, then all you do is you add a 0 on here, you add a 0 on here, right? You're willing to risk £226 in here if you've got a bigger account size, and everything gets bigger as your account grows. I hope that makes sense. Now for the app, I'm going to send this out so that everybody can see it. Now for the app, it's brilliant and it makes it really easy. If I could log on to my own Zoom, let me see if I can log on, and I'm actually going to show you this live on the screen. How do I do this now? I see if I can log into my own Zoom without actually closing the meeting. If this, yeah, hey Mike.
Put it on. Are you talking about Stinu?
Yeah, have you got it on your screen?
Yeah, I've got it on my app.
Oh, that's perfect. So I'm gonna. Are you join? Okay, perfect. Let's do it like that then. Let's do it like that. So yeah. So imagine that's exactly right. You've got a 1,130 pound account size. You've got a 2% risk and 34 pips. All right. What does it say underneath that, please, Michael?
So I then do select currency pair.
Yep. And
I think it was
USD.
GBP USD. So you just type in GBP USD.
Yep.
And then you calculate.
Yep.
And then it shows you that at 2%. Yeah.
Give you a lot size.
Lot sizes, yeah.
Now, the only thing to remember, thank you, Michael, that's all done on the app. All right, you can, and the app is called Stinu, STINU. Please download that app. Please download that app. Now, the only thing to remember from this, guys, let me share my screen one more time as we wrap this up. The only thing to remember about calculating your lot size is that when you see, for example, 0.66 pounds per point, when you're trading lot sizes, you need to divide this by 10. I'm not going to go into all of the mechanics on it, but you need to divide this by 10 so that you get a lot size, which is slightly different, of 0.06. All right, that's really, really 0.06. That's 0 lots like this. Okay. There you go. Lot. Sorry, my typing is not right. So 66 pence per point, you must divide it by 10 to get your lot size. But the app, Stinu, does it all for you. So no need to panic in that sense. You can get it all done on the app. All right. So Rob, a bit of a long-winded one to talk about kind of how do you know what lot size to use, but it is all related to the size of your account. I hope that makes sense. Does any further questions on that? Please ask me right now. I'm more than happy to ask. You just need to unmute yourself if you've got any further questions on how to find your lot size.
Cheers for that, bro.
Yeah, did that kind of answer your question?
Yeah, mate, definitely.
All right, lovely stuff. Okay, cool. Why don't we, at this stage, why don't we kind of look at some of the tools and services that we've got in the academy. Let's see if we've got any trades that are popping up that we can potentially look at. I'm going to share my screen again. I'm going to share my screen, this one here. Let's go to strategies. And first of all, let's start with harmonics and let's see if the harmonics is throwing anything nice at us. And what? Right now, your account is logged into the site from another device. You are joking. Who's in my account? I wonder if, oh, from another device. Maybe Trish is in, maybe my wife's on the account. Okay. All right, let's try another one. Let's try bounce back. Let's try steady. See if there's any trades lining up on steady. Okay, cool. So this is the Steady app created by two guys called Justin Saini and John Dollery. I highly recommend that you watch their go lives if you can. These guys are two excellent educators. Just go on to go live, click on FRX, and you should be able to see John Dollery and Justin Saini. Out of interest, what I do quite often, guys, is I go here, open. Let me do it this way. I go here, open Go Live on another page, and then I go to these three dots where you can see who's live right now. Okay, who's live right now. And you know what I do? I'm going to show you. I minimize this like that. Did you see it all minimize? I don't know if anybody saw that. Can you see that I minimized my screen? So somebody.
Yes.
Oh,
Yes.
Okay, cool. So I'm glad you can see that I minimize my screen. So what I do, I minimize it and I keep it in the corner of my screen so that when it updates, I can see who's coming on live without having to be detailed and write it all in my diary. I got to log in at this time or that time. I do know some of them that I like to log in and watch, but I keep this in my corner of my screen almost every single day. I didn't do it today, Monday. I would have done it by tomorrow, so that I can see when Mike Navarrete is live. So I can see when John Dollery is live. So I can see when Rock Kumar is live. All the guys that I like to listen to. When Abel Melendez is live with. So these guys I like to listen to. So I just keep this up on my screen like this. And then when I see them come live, I'm like, oh, Lex Waves is on. Let me see what Lex is saying today. Highly recommend you look at this, okay? And you can do this if you're at home in the days to do that. So John Dollery and Justin Sani created this Steady app. It's based around those who know how to trade institutionally. Those who know how to trade institutionally. And this is the way that we are teaching people within this team. We're moving towards smart money, price action trading. If you are in the team following our guidance, please don't jump around looking from lesson to lesson, tutor to tutor to try and understand this institutional smart money trading. We have devised a very, very clear roadmap to make sure that you get all of the information in the right order. So yes, we're heading towards institutional smart money, but please just stay on the roadmap that you are on with us to make sure that you get the information in the right order. But this tool Steady is really super, super cool. I like the Swift strategy. And this is calling DollarCAD. This is a new one, and it's actually active. Oh, look at that. Okay, this is a new one. It called the trade. Wow. All right, it called the trade today. We can't move it down here at this level down here. I don't know what time the trade was called to see whether it went lower and actually hit the stop loss. But in fact, it hasn't hit the stop loss. We can see that the stop loss is all the way down here. So we've got a beautiful, clean trade entry, and already we have seen an impulse move on this trade entry from Steady Swift. I didn't look. I didn't take the trade this morning. I've missed this one. So what I do is sometimes I go over here into pending, and this is nice. This is a nice one because this is a pending trade. It hasn't happened yet. So why don't we mark this up on our chart to see if we can take advantage of this trade when it comes around? All right. We're looking at sterling yen. The price was called at 140.10. Let's make sure it hasn't closed first of all. Okay, it hasn't closed. All right. So sterling yen, the price was called at 142.10 as a sell limit, and the stop loss is 142.35. Let's draw that up now. Hopefully you can still see my screen. Isn't it interesting? I've been looking at sterling yen already. Okay, 142.10. Oh my Gideon. Can you see, am I a trader or am I not a trader? Tell me if I didn't have this same trade already marked up on my screen. I should be the one dishing out the trades to Justin Sani and John Dollery. The trade is marked up on the screen. Can somebody pat my back, please? I'm running jokes, people. I'm running jokes. So this trade was already marked up on the screen. They said 142, and you know what? After all of that excitement, I've got the numbers wrong. Take that back. 142.10. 142.10 is the sell limit, and 141. I think we have all of that excitement for no reason, but this was a lovely trade entry. 142.10 is down here. 142.10 is down here. This trade doesn't quite make sense because it was called on the 20th of, okay, so this, okay, sorry, my bad, my apologies on that. All of that excitement for no reason. That was a good trade though. That was a good trade. This is too old and needs to be cancelled. You can see here that this trade has been sitting around for 291 hours. If they should have taken it off here, it needs to go. We would never actually take this trade right now because it's too old. 291 hours. We would never trade that. All right, we would never actually take that trade. This does look like one that was entered by Aurelie. She's one of the traders on the system. It's entered by Aurelie, and she has found that exact same trade that I marked up on my screen here. She has found the exact same trade. So she's entered that from this level on the way down. Okay, cool. So actually nothing pending at the moment, nothing to mark up on this, but use these tools. Come here and see which ones are active, which ones are pending. I think this sterling yen trade should actually now be in the closed category because we've gone in a different direction to that right now, but it's not. These tools are actually pretty amazing, as you will see by this dollar CAD trade, which triggered this morning. And already we have seen a very good rally from that. So I will be watching that for a re-entry, and we'll let the team know if we're able to find a re-entry on that. So guys, plug in with the tools. We don't have to go all the way to the full hour. If there are no more questions today, we can end this now. We don't have to go on all the way to the full hour. Plug in. Sorry, let me just read the chat. Cool. So what was I going to say? Plug in with the tools and services. Plug in with the educators. My recommended educators are Abel Melendez and Zoe. I think they're absolutely brilliant. If you're writing this down, please write that down. My recommended educators are Mike Navarrete. He does indices. He's brilliant on institutional. Rock, R-O-K, Kumar, K-U-M-E-R. I highly recommend Rock Kumar. Who else is there? Zach McDonald is good. Zach McDonald, Zachary Hogan, and Jordan Morgan. They will all kind of show you the institutional smart money style of trading. And if you have not got bounce back and have not been through the bounce back course, I cannot recommend highly enough that you get the bounce back add-on and go through the bounce back bootcamp, which I'm just about to show you, which is actually, one second. Let me just show you this and then we'll wrap up for today. Bear with me 1 second. Everybody that I'm working with, I'm taking them through this bounce back bootcamp because it really will give you the skills of institutional smart money trading. All right, so this here, Michael, can you see that? Thumbs up. You can see the bounce back bootcamp. Yeah. Okay. This here is maybe the most concise, simple way to get your head into the thinking of institutions and smart money. Okay, and I'm recommending it to everybody. I know Rob's been through this. I know Michael's been through this. I know Marsha is way through it. Dominique is way through this already. So everybody that's working with my mentorship is going through this. Okay, and not just these people on the call. Even people that are not on this call today are going through this bounce back bootcamp. It will give you an introduction to smart money, why we trade this way. It will give you risk management 101, the basics of what we just went through. Institutional candles, all the stuff that you need to know to start building your skill set in institutional smart money trading. Now, at some point or another, I think I was talking to Clemmy today, we're going to start to look at this in basic format on these calls. If the questions come in, we're going to try and keep this as question and answer. But if you are really interested in learning this style of trading, and if you are at the right point of the mentorship, then please make sure that you go access the Bounce Back Bootcamp. You need to pay $22.95 a month just for the access to the information, and also for the access to the actual strategy itself, to the Bounce Back strategy, which looks something. Let me show you. I'll show you another day. Don't worry, I'll show you next week. But there's a strategy which is very, very similar to Steady, and it's called Bounce Back as well. And I would highly encourage everybody to jump on that. All right. Okay. Clemmy, you're good. You said this trade is nice to know, or this training is phenomenal. If you've never seen this Bounce Back Bootcamp before, it's phenomenal. 3 phases. Each phase gets deeper and deeper and deeper into the whole institutional concepts, order flow, risk management, part 2, identifying buying and selling opportunities the way that we do it, trading the imbalance the way that we do it, and then you get into step 3, risk management, part 3. We've probably covered most of that in today's course, to be honest with you. Treat trading like your business, essential, that's important, and all the other things you need to know in order to really become a really good smart money trader. So if you need more information on that, then let me know in my personal DM, and I will get you access to that. I'll help you get your access to that. Okay, guys, that's it. No need to drag this out longer than we are. Any other questions, or can we wrap up for today? Okay, so I'm going to go back. I'm going to talk to Montel. I'm going to see which time works best. In terms of numbers, I actually think that 9 p.m. works better for this call in terms of numbers. I know that we went through most of last year doing it at 6 p.m. But now that we're kind of integrating much more with what ICE is doing, we want to make sure that we are part of the schedule. So we'll see. I'll talk to Montel. We'll figure it all out. But every likelihood that we're going to be back at 9 p.m. next week. All right. So just kind of pencil both in your diary, and as we get closer to the time, I'll let you know that we're exactly what time we're going to be at. All right, everybody. Have a fantastic trading week, and you know how to reach me if you need me. All right. God bless. Have a great week. Bye.